So let's start with Volkswagen. German. Wolfsburg in Germany is where it's established. 1937, it's one of the big players in the world. So between them and Toyota, it's basically, vying for who produces the most, which is about 10 million cars a year.
Yeah.
Market capitalization, 72.5 billion euros. And it trades on a price to earnings ratio still very high in the roll-off from the emissions saga and the provisions and all that for that. Dividend yield is paltry, 0.08. Let's go straight to the share chart. And you can see that somewhere around the middle of 2015 was when the disaster struck, when it was disclosed that they had been cheating on their emissions. Just fill us in, where are we on that whole story?
So it looks like it's going to return to profitability. The PE is going to normalize soon. So our next report is actually coming up now. So it's 14th of March. As soon as that comes out, you're going to see that PE. I mean, we've got on a forward PE of I think it's about 6.5. So you're going to see that earnings. So it looks like that's starting to be
6.5. That's real low. So in other words, the earnings will be relatively firm.
And you look at what's been happening inside the company. I mean, the US sales. I mean, Europe is the biggest component, but US sales are growing at sort of 15. I think it's about 12.5.
So explain this to me. Was there not any downside associated with having been found, like the TD diesel engines were found to have not really been clean at all?
Yeah, and I mean, there was an enormous cost. But again, this is a company that is an enormous company.
And the cost is a function of fines as well as potential recalls. Because if you had one of those, you could take it back.
Yeah, so and that's where the cost is. But like I said, I mean, they've provisioned for it, and a lot of that is coming out. So you're starting to see them get on the right side of things again. And
let's put that share chart back up again, because I guess another way of saying it is, had it not been for the saga, this company could have been trading at like 400 euros a share.
Remember, I mean, Volkswagen, it's the company that spends more on research and development than any other company in the world. Yeah. No tech company spends more than them. And I think what this emissions scandal has done for them, it's embarrassed them to an extent where they've now so focused on rolling out clean electric cars that they've put a lot of spend into that, and I think you're going to see that pay off. So I mean, already, I don't know where that share price is. It looks like it fell to just above 100. Back to 146. That's not a bad return if you took the opportunity to buy after the dip.
But if you're German and you had them in your pension fund, you're probably a bit pissed off.
No, absolutely. But again, you look at it over so you look at it over 1 year, 5 years, and 10 years. So over 1 year, 5.8%. Over 5 years, you still made 12.2%.
Yeah.
Over 10 years, 26%. So you're not down.
Yeah.
It's not a great return, but I still think, a dividend yield of 1.4%.
But it's a tremendous company, as you say. I mean, I own 4 cars. Well, my family owns 4 cars, of which 2 are Volkswagen Polos. Yeah. My sons and the drivers.
And my first car was a Volkswagen Polo. And
There's a reason for that.
They absolutely never break. It's German engineering at the best.
And they don't fall apart.
But remember, and this company is not just VWs, the typical VW brand that you think about. I mean, it's got Bugatti, Bentley, Ducati, Lamborghini, Porsche. All of these
don't
are
you have a
Volkswagen.
Ducati?
No, I have a Kawasaki.
Sorry. But you do ride a motorbike around Germany.
Yeah, and that's it. And I mean, there's a lot to be said for VW. Yeah. It's not just. I mean, most of it is passenger cars, but I mean, it's got 13% of its business is financial services.
Just one thing that did strike me as interesting is sometime around the last year and a half in China, there was talk about whether or not they were going to reinstate an incentive which they pay people if you buy a small car. Because in China there was some kind of tax break if you bought a car which had an engine capacity less than 1.8 litres, and then it was going to not happen, and I think it's been reinstated. Do you have any concerns about the Chinese market? I mean, there's a lot of joint ventures up there.
Yeah, so I think the concern around Chinese market is always the regulatory changes that can happen, almost at a drop of a hat. So you look at that, and again, as you said, a big concern around air quality, and that's one of the reasons for the move to smaller cars. But I think the Chinese are going to be very pro-electric, so I think you need to be in that space to take advantage.
But we do know that the Chinese government's very keen to see people invest and spend and consume, and one of the ways you do that is by becoming an urban dweller that has a car. You go on holidays, it's part of the whole thing that is tied together.
And I suppose you also have to look at it. I mean, about 18% of their business is Asian based as well. So what you really need, I suppose, is also manufacturing capacity in China as well. And maybe with the shift that you've seen with Donald Trump being, I suppose, a little bit more hostile, the manufacturing plants will start to move to the countries where they are actually occupied. I mean,
in order to avoid border taxes.
To avoid border taxes, exactly.
Okay, hot or not? Volkswagen?
Yeah,
Current price?
It's difficult because I think over the long term it hasn't delivered. It has underperformed sort of the sector in general. But maybe I think again, if you look at that forward PE of a 6, I think you got to know what you're getting into. But yeah, I think you can call it hot.
I'm going to go hot too, because critically what the last year has shown is that the saga is passing and the demand for the cars remains firm, which tells you that the brand hasn't been unreasonably dented as a result of this rather unfortunate event.